Hello and welcome. You're watching Let's Talk Business. Let's get you a wrap of all the big business headlines of today. Well, markets logged their worst weekly losing streak in 16 months, ending in red for fifth consecutive week. Following a global sell-off, Sensex ended below 65,000, while Nifty closed below 19,300 mark. Banks, healthcare and realty sectors dragged the market. Well, Alex Matthew with a wrap of all the market action.
Equity markets dropped for a second day in a row in India, with the Nifty 50 dropping about 0.6% to close below 19,250. Today, the selling was even more broad-based and the broader markets, in fact, underperformed the benchmark. This is not something that has happened for quite a while, so that's something. This is par for the course. We were expecting this at the start today, where you had the handover from the US that was quite weak, and you had quite a few Asian markets seeing selling today, and that's primarily on account of the cautiousness that is pervading globally ahead of the Jackson Hole Summit address by Fed Chair Jerome Powell. He's expected to give somewhat of a direction for monetary policy in the US. The top gainers on the Nifty 50, the Bajaj twins did well, Bajaj Finserv as well as Bajaj Finance gaining ground. You had Asian Paints, ONGC and Bharti Airtel, but the gainers were few and far between. Quite a few losers. Among them, you had Larsen & Toubro, that was the worst of the pile. You had Dr. Reddy's Laboratories and JSW Steel, as well as Adani Ports and Adani Enterprises that lost ground. One stock that got a lot of attention in trade today was Jio Financial Services. It finally broke out of its lower circuit and in fact was very volatile in trade, but it ended with gains of about 3.8%, and that bodes well for shareholders. Shoppers Stop dropped over 10% after the Chief Executive Officer Venu Nair suddenly announced his retirement. You had Tata Motors and Mahindra that dropped quite sharply. In fact, quite a few of the auto companies dropped after a report suggested that the government might be looking at reducing the customs duty on electric vehicles, and that will be a negative, but we'll have to see if that actually pans out. And finally, Keynes Technology was arguably the stock of the day. It gained over 5% after it signed an MOU with the Karnataka government to set up a project worth 3,750 crore rupees. All told, we'll be looking forward to the address by the Fed chair, and let's see how that shapes things up for the start of next week.
So, bad losing streak there for the markets. But is the Indian stock market in for a 2003 to 2008 kind of rally? Will economic headwinds pose a risk to the stock market? Well, Rajesh Bhatia of the ITI Asset Management shares his insights. Listen in.
There is an expectation that we are going into a 2003 to 2008 straight rise phenomena. You know, Neeraj, if you recollect, we kind of bottomed out in 2003. I think the Sensex went up 7 times during that 5-year period. And the last 3 years of 2003 to 2008, the GDP of India was at a record 9% growth rate, right? But you would recollect that it was helped a lot by the global growth factors. So every country in the world was growing. In fact, you have to find countries which were not growing. Yeah. I think there was an exception of Zimbabwe or something. But other than that, every single damn country was growing, and India had a phenomenal tailwind from global growth. But as I'm pointing out, there is a challenge of global growth moving into the next year. So I think this bet that India will go and experience the same 2003 to 2008, well, everything is a probability as far as forecasting the future is concerned, but the probability of that is relatively lower. I am in fact more observing that economic recoveries are also a little uneven, as we move forward. So in that context, of course, we have gone up and are slightly expensive, I would say, as a market. Not exuberant yet, but certainly slightly expensive. And I would say that it's not easy to find value at this moment in the markets.
And well, as alternative investment options gather steam, Ask Group unveils its first private credit fund. Now, does private credit offer an alternative to equities? Should investors opt for performing private credit? And is the trend here to stay? Listen in to what Shantanu Sahai of Ask Private Wealth had to say.
I think this is a trend which is only going to accelerate. And the reason very simply is that the two growth engines that I spoke about, what is going to happen is that it's going to spread more and more. Private equity money continues to come at an unprecedented pace into this country. domestic consolidation, not only is it happening, the sizes of those consolidation entities is going up. So as a result, the sizes of M&As are becoming bigger. And therefore, the need for capital on both those counts will continue to stay. Yes, the tide will ebb and flow depending upon whether there are alternative pools of capital also available to the same people to essentially meet some of these funding requirements. For example, if the equity market were to come back in a big way and become a lot more available to every type of product, some of these people would probably say, okay, you know what, let's try and raise equity rather than try and do some kind of debt, or maybe do part debt and part equity. So there may be a little bit of tempering as a result of the ebb and flow of the equity market. But personally, my view is that this is a product which is the hallmark of a maturing financial market. If you see the trends anywhere else in the world, it points to the fact that the institutionalization of private credit is something which is a fait accompli. It is going to happen in India. It is happening in India, and it has already happened in this country in the last 24 to 36 months. This market was a lot more pronounced within the leverage finance space, which the financial sponsors used to use. It has now started becoming a lot more ubiquitous within the non-sponsor community as well, i.e. the promoter community as well. And this trend is only going to accelerate. So personally, my view is that we are in for larger funds, larger ticket sizes, more funds. But yes, there will be some degree of consolidation at some point, as is always the case with any community. Market, yeah. Some funds will stay, some funds will not.
And with a funding winter in the Indian startup ecosystem, Zepto has entered the elite unicorn club. Now, the instant grocery delivery startup has raised $200 million. With this funding, Zepto became the first Indian startup to attain unicorn status in 2023. Now, its CEO and co-founder Aadit Palicha talks about how they are planning to use it and use the capital as well. Listen.
In terms of how we plan to use the capital, counterintuitively, we're actually going to take this capital and push harder towards profitability. The idea is, we want to get to EBITDA positive in the next 12 to 15 months. We're on track to do that and continue growing the business at the same time. The reason why we raised this capital is because we were able to grow our business 300% year on year to a base of thousands of crores in annual sales. And now we're in a position where most of our dark stores are fully profitable, generating cash on a fully loaded basis. And we've been able to do growth and profitability simultaneously. That's the plan for the next 12 to 15 months as well. Grow the business, cross $1 billion in sales in the next few quarters, and do it while hitting EBITDA positive by 12 to 15 months from now. So we're going to push hard towards profitability. The idea is to remain disciplined, remain measured, avoid complacency, and just keep pushing harder towards profitability. We're going to go deeper into our existing markets. We're seeing a huge amount of potential there. I think most people really underestimate how big this business is going to be, and we're seeing it going deeper and deeper into our markets without growth slowing down.
And amid global economic headwinds, Indian economy has held its ground. With the upcoming festive season, economic activity is likely to get a further fillip. The big question is whether inflation can be dampened and whether it can dampen the spirit of Indian consumers. Pallavi Nahata is here with a detailed analysis. Over to you, Pallavi.
The festive season in India is almost here. While that means more sweets, more shopping and more holidays, it also means that the Indian economy is set to receive a little bit of a bump up. According to one estimate by the Confederation of All India Traders, from Raksha Bandhan, that's later this month, until November, there will be an infusion of nearly 3 lakh crore rupees by way of sale of goods. Festive sales are a barometer of the economy's performance, more so this year as consumers grapple with high inflation and first quarter demand was affected by unseasonal rains. According to Teresa John, lead economist at Nirmal Bang, discretionary spending has been under pressure since last Diwali but has seen an improvement in July and August and is expected to continue and pick up pace amidst the festive season. According to Kumar Rajgopalan, CEO at Retailers Association of India, the season is off to a good start and sentiment remains positive thanks to the end of season sales earlier this month. Employment also appears to have seen an uptick. According to a report by Quest Corp, there has been a 23% increase in staffing requirements between April to August this year compared to an year ago. This increase was largely led by manufacturing. Quest Corp expects this trend to continue as we inch closer to peak festivities, especially in industries impacted by direct consumers such as e-commerce, logistics and auto. Still, the mood is that of cautious optimism. Retail inflation rose to a 15-month high of 7.4% in July, led by a rise in food prices. It's expected to remain elevated in August and will weigh on household budgets.
And well, in other news, LNT Defense has become a part of history. It is one of the companies involved in the Chandrayaan-3 mission. Executive Vice President and Head of Defense Arun Ramchandani tells us what's next and what's the next key milestone for Larsen & Toubro. Listen in.
LNT Defense has a large landscape. We have very exciting products in the land system domain. We are working on light tanks. We are working on futuristic infantry combat vehicles. We are working on self-propelled howitzers. And we see all of this scaling up into something of significant scale. We have a lot of programs going on in the shipbuilding. There are next generation warships coming up.
So, well, a moment of history there for Larsen & Toubro. That's all that we had on Let's Talk Business. Short break. Come back for more on the other side.